Guys, today we have important stuff to talk about. Bitcoin is pumping, and the number one question is, of course, if this is going to continue or not. Today, I'm going to share with you the data you need to know about right now. I will also share with you some very important stuff. A lot of people got wrecked on this move, and I will also talk about who is actually doing the buy-in right here, because I do think that there is one specific person that is actually pumping this market, or at least initiating the pump, and now everyone else are catching up on it. And you can see that we are right now above 27,900. We were above $28,000. I will share with you what I think is the next major move for Bitcoin. Welcome back, everybody. My name is Chris, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you are new to the channel, then make sure to subscribe and activate the bell right now. So let's get straight into it, guys. So what you can see for Bitcoin here is that we have had a pretty sizable and nice pump after finding support here at 27,200. We have had a pump up to 28,000, above $28,000 actually, which is, if you take it from the consolidation here, it's actually a 4.5% move, which is not too bad. Now, in yesterday's video, I was talking about a potential major move happening for Bitcoin. Now, if you look at the consolidation here, I showed you this pattern yesterday and this rising wedge. Now, these typically break towards the downside, but this time it did break towards the upside, which is nice. I gave you both scenarios yesterday. Depending on which direction this was gonna break towards, then you would see a decisive move. Now, this was actually pretty powerful, because the normal thing would be for this move to come up to, $27,200, maybe even 27,400. But this was a bit more powerful than what you would normally expect on a consolidating rising wedge like this, because this was not a very big wedge either. It was not very wide. So, well, it's very welcome. We can see right now that we are once again approaching the $28,000 level, which is all good. Now, for Ethereum, we have had a pump as well, not as massive as for Bitcoin, but we have had a nice little pump here. And you can see that this is from the $1,527 level, from the support level, we've had that pump. Now, what is next for Bitcoin? Well, the number one thing right now is, that I love to look at the moving averages. Whenever we have a big pump, I love to go back to the moving averages and see what's going on. And right now, you can see that if I do something like this, you can see that we got rejected actually right on the 200. Is that the 200? Hold on. That is actually the 200-day moving average is where we got rejected right here on the green line. So we did get rejected right on this. This is pushing us down right now. But honestly, what you're seeing right now for Bitcoin, it feels and it looks like this wants to go a little bit higher. And if we do see a little bit higher than 28,500 is the edge of the orange box. This is a key level, guys. This would be a logical level. If you're looking to take profit on this long, this would be a logical level at $28,500 to take profit on that. And if you're looking to short, this would also be a logical level to short Bitcoin for a short-term trade. But you have to be careful, because Bitcoin can go up ferociously, and especially the big whales, the big players are trying to trap people. But you can see the last time we went up to the edge of the orange box, I said the exact same thing here. We were pumping and I said, look, once we get to the edge of the orange box, that is a logical point to short or take profit on that long. And look at what happened after. We started to go down, went down from 28,500 down to 26,400. And so it goes. So these are the key levels to watch right now, guys. The edge of the orange box. As always, I will keep you updated. Now, for traditional markets, we have opened up the traditional markets. Not a lot has happened. We've been trying to break through this resistance level. So far, we've been failing, but we will see once things start to pick up throughout the day. Now, for oil, you can see that oil, after having that initial massive move towards the end of Friday, we've been going sideways a little bit on the opening here. So we will see what is going to come out of this. But there was actually almost $40 million worth of liquidations here for Bitcoin just on this candle itself. So this is something to pay attention to as well. Now, for my trades, you can see that the Ethereum bots are, having a loss, but the Bitcoin bots are doing tremendously well. So you can see that the Bitcoin bots right here, they are very much equalizing out at least the losses here. So overall, we're still at a profit right here. And if Ethereum can also have a similar kind of pump to Bitcoin, let's say it outperforms Bitcoin by a couple of percent, then the take profits are going to be hit on all of these Ethereum bots, and that will be absolutely massive as well. So let's keep an eye on what's going on here for the markets. But if you want to use the same kind of trading strategies I'm using as well, then you do have the one-click link in the description. First, get an OKX account, claim up to $60,000 in deposit bonuses. Click on this, click join now. And then once you have clicked join now and you have joined, then with one click you can set up each and every one of these bots. Now, recently, it's been very obvious that the Bitcoin bots are doing better than the Ethereum bots. So that is definitely something to keep in mind as well. As you can see here, all of the Bitcoin bots in profit, all of the Ethereum bots are at a loss. But overall, using all of these, we're still at a pretty decent profit. So that is absolutely fantastic. Now, let's continue and talk about Bitcoin here, because before this major move, you could see that a lot of old coins were moving. So a lot of old coins had been moved right prior to that. So this suggests that it's actually some very old investor that's been moving their coin and been selling them. And who have they been selling them to? Well, if you look at the Coinbase premium, it shows that most of this buy-in basically came from Coinbase. So it was spot buy-in. Someone was actually pressing the buy button on Coinbase, not futures, not leverage, but the actual spot. And we know that there is one investor that loves to buy on Coinbase. That is Michael Saylor, the CEO of MicroStrategy. And he actually posted yesterday, Bitcoin is power. So I do think that this was actually Michael Saylor that at least triggered this move, and then everyone else started to catch up on it. And we did see that cascade of liquidations, which meant that short positions had to cover, which meant that you saw an even bigger squeeze, even bigger pump for Bitcoin. But in the beginning, it all came from spot buy-in here. And I do think that Michael Saylor is most likely the one that is behind that. So far, so good on that. Let's keep an eye on it. Now, one key thing to also keep watching here is that the grayscale premium has shrunk. So this used to be at minus 40% here, meaning the Bitcoin that is in this actual fund were actually discounted by 40%. Now, with the conversion, potential conversion from grayscale to a Bitcoin ETF, this means that people are now buying up the shares for Grayscale here, because they are essentially, if this gets turned into an ETF, just by buying, if you were buying down here at minus 40%, once this gets turned into an ETF and you bought down here, you're immediately, instantly making those 40% back, because the price will go back to the actual spot price of Bitcoin. So this is something to pay attention to as well. It's currently at minus 16%. So let's keep an eye on if this is going to continue to shrink. People are buying a lot of GBTC right now in anticipation of that spot Bitcoin ETF conversion. Now, finally, one more thing I want to talk with you all about today. This is more like a macro thing. But let's look at how the markets are anticipating the Fed to behave moving forward during the next few years. So we know that January in 2023, we were at about 5.5% in the interest rates. It's anticipated that January 2024, we will be at the same interest rates. That's fine. But in January 25, it's anticipated by the market that we're going to go down in 2026, that it's going to be at about 4%, bottom out here at 4%. And then during the next years start to go up. So basically the market believes that we are going to have now normal rates at about 3-4%, maybe even 5%, that this is the new normal, which makes a lot of sense actually. But you can see that for the last 13 years, the market was used to cheap money. The market was used to actually the interest rates being very, very low, close to zero. So everyone was able to borrow cheap money, buy property, buy everything, pushing up the prices. But now you're slowly potentially going to see a little bit of that liquidity being drained out by the interest rates being higher. So let's see, and this is why is this good? Because if the market are believing this, if we do see rates going back to like 0 or 1% or 2% even, then that is going to signal to the market that the money printer is back on, that cheap liquidity is back on, and that assets are going to go up. So we want people to be pessimistic. We don't want people to assume that you're going to go back to 0%, and then once it happens, it's just in line with the market beliefs. We want people to believe that things are going to be tough, and that once things go back to 0.5, if it happens, then it will be a nice surprise for the market and assets will continue to go up. So this is what I'm watching right now as well, guys. This is anticipated to go back up to like 5% during the next 7 years. So we will see. But that is what I got for you. Thank you so much for watching this video, and I will see you in the next one.